Hello, hello, mic test. Mic test. Hello, guys. Give me a small amount of time while I go around and check if I'm online properly on all channels. So it looks like TradingView is streaming it. And now let's just quickly check YouTube. And YouTube. Although I'm unable to verify the audio at this point. Yeah. Okay, now it's there. So John is live on YouTube. Let me see if he is there. So if anybody is live on TradingView, they can just use the comment section and confirm about the audio. So if anybody is live on TradingView, they can just use the comment section and confirm about the audio. And I think I'm getting a very weird sound from this one. Okay, so I can see that the audio is working. Hi, John. I'm doing well. Sorry about this delay. So won't happen again. Is the audio clear? Is the screen visible? What I'm hearing at my own end is that the audio is a little bit off, but it is clear. But it is sounding like somebody else's voice. Hello, Praveen. Thank you for the comment, Praveen and John. So in that case, let's not have any further delay. And we have actually multiple trades running in, so we have a lot to discuss here. So let's just quickly, let me open up the website disclaimer and then we can just get fired up. So before any further ado, let's just first go over the legal disclaimer here, suggesting that all content presented So you can see the disclaimer, all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do want to use the views presented here, you yourselves will be liable for your profit loss of profit. And rest of the disclaimer, you can just pause the video and study. And with the legal stuff out of the way, let me give you a very small introduction, small and quick. My name is Neerav Yadav and I'm the founder of 50 Eyes Market Analysis, 50eyes.com. 50 Eyes Market Analysis is the YouTube channel, and this YouTube channel and this website contains information regarding trading, regarding what do you call markets. The markets basically which I cover are basically I cover all the major markets in the world, but to be more precise, I cover commodities, crude, gold very regularly, indices S&P, Nifty 50 very regularly, Bitcoin, cryptocurrency, as well as forex pairs like Euro USD, USDJPY, CAD, JPY, etc., etc. So I cover these markets. I discuss the what do you call strategy on how to trade them, right? And I've been doing these live broadcasts, this series of live broadcasts called Trading Opportunities, right? These live broadcasts are conducted twice per week, but we will be moving to thrice per week from next week, and the format will be Monday, Wednesday, and Friday. So for now, we will stick with Monday, Wednesday, and Friday, and if anything changes, I will update you guys via my emailing list and Twitter. And obviously, I'll make the announcement in the last webinar as well before making a change. So, what are these webinars really about? Obviously, we cover these instruments, and I cover them using Elliott Wave, which is my area of expertise. And as you can also see, I have book written on this very subject matter. It's called Think with the Markets. It's available on Amazon Kindle. So Elliott Wave being my area of expertise, I have something to show off as well. I have a forecast accuracy, which is what we say, or from what my knowledge is the highest in the industry so far, because I have a track record since 2016 with accuracy 83, gain 87.5 for 2017, 84.6 for 2018, and if we go up 2019, 84.8. 2020 88.52 and 2021 82.22, which is, as I said, unseen in this industry for a consecutive 6 years, and seventh year is still soon to be published because seventh year is not complete, which is 2022 yet. So this is the track record, which basically means that if I said something about this instrument crude oil on this date, then this is the statement I made about the instrument. It did move exactly as expected, so we give it +1. And this particular instrument, S&P 500, we said something about it on this date, but it did not move as expected. So we gave it not as expected red, and this is -1. So we just add them up and divide them. Simple math. 37 out of 45 worked, so the accuracy was 82.22%. So that's how I'm claiming this high level of accuracy. It's all public. It's all there for you to check. So that's about it for my introduction. And one final note from you guys. Just tell me if the audio and video both are working fine, and then we will move on to the actual content. Praveen and John are still there, and Trading View, I'm not so sure. And Praveen was telling me if there was some noise. If the noise is okay, it looks fine. If the noise is annoying enough, you can just let me know. You can try to do something about it. Okay, so let's move ahead then. In that case, let's go ahead with the chart of Euro USD. And as you guys already know, our analysis on Euro USD for a long time has been thanks Yapa from Trading before the comment. So keep participating as we go along, because it's a webinar and we would like to see more and more people commenting here. So yeah, in Trading View, in Euro USD, we were going with the analogy that we expect this to be a wave 4 high here, right? And we were expecting the market to give possible reversal. But as I said, it was not really what you call a hard and fast rule that the market should reverse from the 38.2 level, and the market could very well be following some other count. So keeping that in mind, we were in the last webinar saying, I was saying that if this market continues sideways, not sideways, basically in three-wave corrective structure, then we can expect to see another leg up. So if we go ahead and look on the smaller time frame chart, we find that from this last level, which was, look at this 1.043. So if I mark this level, and I mentioned the fact that here we were expecting it to reverse because it was 38.2, then you can say the market tried to reverse from it at 3 different occasions, right? But it's still fluctuating within the same price range. So I personally think that at this point it is a viable option to believe that maybe this was something, maybe for or maybe whatever it was, but it's still continuing. It has some more upside remaining. And the reason why I'm saying is that from this point of reference, which is the last price action around 1.0487, 1.04818, roughly speaking, from here we seem to have a corrective leg down. A down, A, B, C, D, E for a triangle, and then C down. Right. So those of you not familiar with Elliott Wave, I'll just quickly point out that A down, B up, and C down is what we call a standard zigzag correction, where the first leg down is called an A, upward correction sideways, the corrective sideways movement is called a B, and then the last leg down is called a C. So with that in mind, if this is an ABC correction, then I'm expecting this market to follow with one more up leg at the bare minimum, right? Based on that, I have entered some longs, right? Obviously, we can be wrong. So if we are wrong, then the only hypothesis that this market is following would be that this market is forming a leading diagonal to the downside, right? Now let's quickly check the leading diagonal before we figure out the invalidation levels. So a leading diagonal is a pattern which has 3 waves down, 3 waves up, and then 3 waves down again, 3 waves up, and then 3 waves down again. So the first leg of 3 waves down is called a wave 1, the second leg is called a wave 2, the third is called a wave 3, a 4, and a 5. So if we compare this with the actual chart, we can say that this is the first leg down 3 waves, right? First leg down 3 waves. So this is the first idea that comes to mind if we are to still consider this market going down, right? However, the reason I'm not considering it the strongest possibility is that for a leading diagonal, this wave 2 seems to have gone and given a rather deeper retracement. Generally, we would not be seeing, I mean, not a generality, but it sort of does not fit the idea of a leading diagonal for now. So, but anyways, everything is possible. That's how markets are. So what I will be doing is, if this market really crosses below 1.02573, I will stay on alert. At that point, possibly I will have to even reanalyze the market and think about the possibility of leading diagonal down instead of the current count which I have is correction down and then leg up. That's my quick take here. Both things are possible. It's just that the retracement is very deep enough for me to assume that leading diagonal is a less likely scenario. That's why I have entered longs. So another take you can do is, if you are not really long this market, you can simply just go long on the break of this last high. That although is conservative, but and less rewarding, but it also has what you call the bias of higher potential accuracy, right? So instead of going long here, you can just stay conservative, and once the market takes out this high, then you can say yes, that this market is now going to fly higher than the last high. So that's my quick take on Euro USD, right? That's the whole trade. Nothing too complicated, but I'll just wait for you guys to see if you have any comments. And if you don't have any comments, just as usual, type in clear in the comment section. Okay, I'm seeing that there is no such response on TradingView. But that's all right. Let's then proceed with our audience, which is available on YouTube. And we have response from John saying, okay with your analysis, Praveen saying, clear. So in this case, let's move on to the second chart. The second chart will be our chart of EURCAD, right? So EURCAD, let's have a quick look at that. By the way, it says here that I had a sell setup on EURUSD in the last webinar. I would like to quickly check 1 second. What was I saying in the last webinar? Just to keep check on what we say and what happens. Hi Junaid, yes, gold will be covered in a little while. First we'll cover the forex pairs. You just have to stick around for a while. That's just the standard analysis, long-term view. You want to have a quick look at short-term. Hey, when we will be covering S&P's 500. We might look at US 100 as well, but S&P 500, I can assure you, we will check. Yeah, okay, I remember there were two setups. The setup was that if gold take out this low of 1.0220 something, then we will look for sell. And the other one was if it takes out this high, then we will look for longs, somewhere along those lines. So from what I recall, 1.0220 was never triggered, and hence the long was never triggered. That was what I was talking about. Yeah, that's it. The short was not triggered and the long upside alert was triggered. That's why I entered longs. Okay, so that was what we discussed in the last webinar. But anyways, it sort of is following the plan so far. Now look at EURCAD. Okay, so in the last webinar, I said very clearly, I remember that part. So in the last webinar, I said that EURCAD is having a sell setup, but it has become low probability. And the sell setup was that if it goes and breaks out this P-L or possible sell line, then we will be interested in selling this market. So first of all, it never really broke below this possible sell line after we drew it in the last webinar. When was the last webinar? It's posted on 23rd. I'm assuming that this had already happened here. Even if it had not, anyways, my point was, if you guys have watched the webinar, if you have not, you can watch the recording. It's available both on TradingView as well as my YouTube channel, 50 Eyes Market Analysis. So coming back to the point was that it was low probability because this channel was sort of behaving in a weird manner. By weird manner, as I pointed to last time, once the channel is broken to the downside, it is again getting back inside the channel and then breaking it again. This generally is a sign for me that the count has become low probability, right? And that's why I was saying that even if it goes lower, I will be only entering very small positions and remain cautious. And later on, what we saw is that it really did behave in a different manner because this market has, instead of going lower, it has broken the last high, which is not we were expecting to do if this count was correct, right? At this point, I'm of the assumption that this market is probably forming some sort of what do you call continuation of this wave 5. Now it could continue in multiple different manners. First of all, we can think of it as a 1, 2, 3, 4, 5 for wave 1, and this could just be the 2, or this could be the 2. and this could be continuing for the 1, 2, 3, 4, 5. Sorry for that. So we are talking about a wave 5 in a diagonal structure. In a diagonal structure, fifth wave will have 3 waves inside it. First leg is called A up, B down, and C up. Basically a zigzag formation. And if we compare this zigzag with the actual price action, the first leg up will have 5 waves, which is what I have counted here, roughly. And then the correction or the joining wave B, and then the next leg up C. So you get my point. The rough idea is that maybe it is continuing like this, right? So I don't really want to bother myself with it at this point in time. We will just keep tracking it, and somewhere along these lines, probably in the next webinar, which is on Monday, and I'll just be a little bit more precise with the dates here. So next webinar is on Monday, which will be 28th of November 2022, same time. So by then maybe we will have more clarity, right? And by more clarity, we will just basically be looking for the completion of this wave B. Once the wave B is complete, we possibly will have some long setups on the short term. And position traders can wait for the C to complete for some possible sell setups. So that's my take on EURCAD, sorry. And nothing really too fancy here. Everything is rather simple. If you guys have any queries still, just type it in the comment section, or you can just type in clear. That way we will know that everybody is on the same page. So Praveen and John on YouTube will wait for your response. And how about the guys on TradingView? I see 4 people are online from what it seems. Are you guys also understanding what I'm saying? Am I too fast, too slow? Any response? Hello Ganpati, how are you doing, man? Did you catch whatever we discussed on EURCAD? So Andre is saying on YouTube that he understood what we were saying. He understood. And by the way, am I online? It is showing in the incognito tab which I have of TradingView that there was some issue and the stream has stopped due to corruption of source, something like that. Was there an issue, or is the stream going live? Are you able to understand what I was saying? Stream is live. Thank you, Andre. Thank you for the response. And thank you, Ganpati. And obviously, as I say many times, just keep typing in comments. It's a webinar, so I like to see what you guys are understanding and what you guys are not. I will be very glad to clarify it for you. And yeah, the guys on TradingView, if you could kindly hit the like buttons if you are understanding what I'm saying, the rocket button over there, because TradingView will feature the streams if there is enough number of likes. But what I see is a lot of you people understand and participate in the comments, but forget to hit the like. So I'll have to ask you politely here. So please hit the rocket button on TradingView and the like button on YouTube. So Andre is asking, can you do crude oil before you leave? Obviously, I always do crude oil, gold, S&P 500, Nifty 50, Euro USD, USDJPY, EuroCAD. That's our usual coverage, along with a few more things. And we will also look to cover BTC. Just stick around till the end of the webinar, and obviously I'll discuss it as I just said. So after EURCAD, we'll just look at the next thing which we generally cover. Let me see which one is that. And let me click the hide button on the stream share link. Yeah, so the next thing which we'll be covering is US dollar against Japanese yen. Again, an interesting chart. Let's have a quick look at it. US dollar against Japanese yen. There it is. So this is the chart of, is this the one I'm following? Let me quickly check. Yeah, no, that's the one I'm following. Yeah, so this is the chart of USDJPY, and we remember in the last webinar I was discussing there were two scenarios. One was suggesting that what we have on screen, and another was suggesting possibly something else. So I will not go into the other scenario because the one which we thought was having some downside remaining seems to be the one playing out. And because I have already sort of traded in accordance with it, there is not much point discussing the counter view unless the same is triggered. So the view we have on USDJPY, sorry, is that from this point of reference around the level of 1.51, 0.983 something something, we have a corrective structure down, and which we have labeled as WXY, right? So where's this Y taken here? Yeah, so we have labeled it as a W, we have labeled it as an X, and then we have labeled it as an Y. And if you are following me, you already know, because this is the count we have been following for a very long time here. And this is your second connecting wave X, which should be followed by a Z. So what I'm basically talking about here is what are the W's and X's and Y's and Z's is basically it's a Elliott wave corrective pattern. It's called a double zigzag or WXYXZ. So a double zigzag means that there is a zigzag. So this is what we call a zigzag, right? Just kind of move leg down, small up and down. So we have a zigzag, a connector. Connector is called an X. We have another zigzag. So this will make it a double zigzag because we have one zigzag here and second two zigzags. But in the same case, if we have another connector and another zigzag, it will now have three zigzags. One here, right? Two here and third here. So because now we have three zigzags, right? Very simple here. I believe everyone is understanding me. One here, two here, and three here. This will then be called a triple zigzag. So in this case, I am assuming that this market is forming a triple zigzag formation, which will be called a WXYXZ. First zigzag down is called a W, second is called an Y, and the last one is called a Z. Okay, so based in alignment with this understanding, we expect the Y to be taken out to the downside, and the Y is not yet really literally taken out to the downside. Yeah, practically theoretically you can say that the Y was here, so it is taken out, but generally the market will almost always take out the last low. So the last low in the series is yet not taken, so that's why I am holding shorts also on US dollar Japanese yen. Keep in mind, US dollar Japanese yen has sort of an inverse relation with Euro USD, and as I just mentioned, I'm also long on Euro USD. So I'm taking related positions, and this is sort of increasing my risk. Generally, people like to take non-related positions, but oh well, I just take whatever is clear to me. So that's my quick take on what do you call US dollar Japanese yen. Tell me if there is some doubt here. And yeah, just keep in mind this X can just propagate sideways. It's not really required to just fall straight down. It can just go within this range, right? It may very well just break the range a little bit for some time as well. That's also possible, right? So I being short does not mean that it will just fly from here. I am prepared that if it goes higher, I can adjust my positions, and I might even just get out of the position and re-enter again, because the idea is to stick with the direction, not necessarily with the position. So I'll just check the comments. If you have no doubts here, just type in clear. So we have a lot of comments on YouTube. If Ganpati saying if WXYZ means each way, W is corrective and so on. But can you please show the internals is possible? Is ABC? ABC, I don't think it's possible, because when I checked the internals, it has three waves here: A down, B up, and C down. And then the X is a triangle here. So I'm just counting the internals because this is a request on YouTube. So in a triangle, you have A, B, C, D, E, 5 waves. It's like inside the compressing trend lines. And then this is your second A, B, and C. So this is your second A, second B, and C. This completes your Y. Okay. And then X here is clear enough. It's an A up, a triangle down, and C up for X. And then this Z is not complete, so I'm not really going to be emphasizing much on it, but you can count in it multiple ways. And I think that clarifies your doubt. You can just pause the video in the recording when you watch the recording, and internals are quite clear now that I pointed them out. John says it's clear on USDJPY. What about the trading view audience? I see some requests. Are you guys making requests and then disappearing? That's not very nice. I would like you to stick around and also understand other markets. Maybe they are of not interest to you, that I will understand. But still, then how will you know that I have covered you what your crude and gold requests? Okay, so Ganpati is also saying sure, sir. Okay, then in that case, let's move on to the next chart. Next chart will be EURJPY. We had a possible diagonal formation in the last count that we discussed. After EURJPY, we will cover crude oil and then we will cover gold. So there it is, EURJPY. Yeah, this is the count we are following. So in EURJPY, what we are following is a diagonal formation. Thank you, Andrew, for the response. And the diagonal formation is starting from the low. I'll have to go to the daily chart here. So the diagonal formation is starting from the low level of 114.393, roughly speaking, time around Wednesday, 6th May 2020. Okay. From this point of reference, the starting point of a wave count or of our analysis is called a point of reference. It's my own terminology. So, anywho's, let's go ahead and see how things are forming from this point of reference. So I am assuming that it's a diagonal formation as I've discussed in multiple webinars, but as I know some people join in live all the time. So what I'll just do is I'll roughly give you an overview. Sorry about that. So a diagonal formation will look something like this: a wave one up, a correction down, and three up in three waves, and then a correction down which overlaps with one. Okay, overlaps with one is important here. And then the fourth down is the one overlapping with one, which will be followed by a fifth up. And this is a contracting diagonal, so if you draw the trend lines, they should converge at a future point. So obviously I did not do a very good job of drawing. It will be something like this. So if I draw these lines and extend them, they will somehow converge in future or intersect at the future point. That's what you call is the rough definition of an ending, leading, ending, whatever it is. We are just calling it a diagonal. We don't really care much if it's what is what. All that would be of reference later on or used later on, but let's just go with it. So this is your first wave in the actual chart. Second wave, third wave is I believe here because we have overlap here. Fourth wave and fifth wave, right? So as I just said, wave 4 and 1 are overlapping, so it fits the requirement. And you can check each wave has 3 waves inside of it. This, like as I said, 3 waves. This is having 3 waves. 3 waves, 3 waves. You don't really have to check choppy, overlapping, inconsistent, or complex looking price action is a characteristic trait of diagonal formation. This is, by textbook definition, choppy, overlapping, complex looking, and congested looking correction. So it does fit the definition of a diagonal. Anywho's, our point of interest becomes the wave 5, right? Because if it's complete, we will look for selling. If it's not complete, we may have some longs incoming. So see, the general resistance for wave 5 is the trend line. It is already touching the trend line, but it does not mean it's a sell, because a sell would come after it just touches the trend line again, or who knows, maybe the third time, right? So that is not yet a sell. That is what we were analyzing for so long. Let's see if there is some improvement in the situation. Let's go to 4 hour and see. So it does not look like there is much improvement in the position. We have the 4 over here, and from here, as I said, we will again look for 3 waves, and it could still be having one leg up remaining. There is no confirmation that I have that the 5th is complete here. Although because it's a complex count, I can count it multiple ways. Anywho, long story short, I am still not changing my count. So sorry, there is no update here. But for those of you who are new here, the alert is 1 to the downside, 142.876. At this point, I might reanalyze the market. I'm not going to trade it. And another alert is at 147.864, which is near the high. Yeah, this alert would suggest that I should possibly take some long-term, some long positions, not long-term, some short-term long positions here. No sell-off yet. Some short-term long intraday maybe can be taken here. So nothing really new in EURJPY. If you guys have any doubts, just type it in the comment section. If you don't have any doubts, just type in clear, and I'll wait for 10 seconds or so for your responses, both on YouTube as well as TradingView. Type in clear if you are clear. So guys, I'm seeing YouTube. John is saying clear on EURJPY. Ganpati is saying clear, sir. And Juice to Vitan is saying clear. Vitan, if I'm pronouncing it right. And Andre also says clear. And Van is saying clear. So yeah, let's move on then to the requested charts. Not really. I'm taking it not as a request. I always cover crude and gold. So next one will be crude oil, and then gold, followed by BTC and S&P and Nifty. That's our progression now on. So let me load onto the chart of crude oil. WTI is West Texas Intermediate. Interesting chart. So if you guys recall, if you have been following my webinars, we were following a downward movement here. I'll just elaborate more on it once I read a comment. I have a comment from Andre saying, in other words, you would be very cautious when taking shorts, as it still might have some upside. And that is correct, Andre. And you will have to be cautious with the longs as well, because the longs are counter trend, or soon to become counter trend, because the 5th wave of a diagonal is generally sometimes very fast lived. It might just give a spike up and then fall. So even the long here is a counter, what do you call, cautious situation. Like you are taking a very higher level of risk if you are even going long. And short, we are unclear, so it's obviously risky. So Euro, that chart of what do you call EURJPY is a risky one altogether. Any trade on it will be extremely risky. So getting back to the chart of crude oil. So remember guys, when we were discussing it, we have been following a discount for a long time, by the way, for many months, many moons. So the account we were following was that this was W, X, and Y, and I was assuming when I started 2 weeks back, we were assuming that this will form an ABC for wave 1 up, wave 2 down, and then it will fly high for 3. Okay, so this was the first count we started following on crude oil 4 weeks back or something, right? I even entered some longs here, and then I exited around this level, 82-ish something levels with loss. And the reasoning was that, as I mentioned so many times, the WXY correction is something like this. First leg down, correction, X, and then the next leg down. So once it is complete, either the market will move higher or the market can just continue going down with the next leg, X, and then the Z. So in this case, we were here and I assumed that this is complete and this will go higher, right? So what I thought at that point in time was that this was a possible one up, possible two down, and then it will go up, right? However, when we did the last to last webinar, which is trading opportunities webinar number 2, right? You can just check it. At that point in time, I was saying that this market was something I think here. I don't exactly remember where it was, but it was definitely lower than this, right? So at that point, I was saying that this does not look to be a long setup anymore, right? And although we did not have the proper counts for this market, I said a very simple statement that if a very clear looking long setup does not perform, then that leads to a very clear looking sell setup. And the counts are not really required because that's the general way you trade. So as I said, the concept is this is an important concept. If you had a very strong buy setup, but for some reason the setup fails, your invalidation level is hit, your stop loss hit, then that generally is a sign that it has now become a very strong sell setup. Remember, the setup on the buy side has to be strong. And why am I emphasizing this concept is because when you are trading live on intraday charts, very small time frames, sometimes you won't have the time to go around and count the whole thing. Okay, your long setup just got invalidated. Sometimes you just have to take the short setup. So this is what you call an extension of your instincts about the market. Uh, and do remember, I'm emphasizing the word strong long setup, right? Just not any long setup. There are hundreds of long setups that form in the day. You just can't go around selling them if your stop loss hit it. That would be foolish. The strong word here emphasizes that you had a high conviction that this would work. And if a high conviction thing does not work, then that means someone on the other side is sitting and he has a very high selling power. That's the concept behind it. Your high conviction basically here means that you had seen something that was suggesting that the bulls are really in favor of the taking the market higher. And when that conviction was broken down by the bears, that means some strong bear party is holding the grip of the market. So that's where the concept comes from. Just another added educational point here. Let me know if you like these educational points. I'll keep them coming in the upcoming webinars instead of just talking 1, 2, 3, and WXYs. Okay, I'll not wait for the comments here. I'll just move ahead with the count here. So WXY, and as I said, we are expecting this to become another X, and I'm assuming that it might go a little bit up before it goes lower. So what really I'm saying here is, let me see if I have a proper count here. Oh, I do have a certain amount of count put on this chart. We will just go to a lower time frame. Thank you, John, for the feedback. What about the guys on TradingView? Did you not like my little additional concept? Okay, so crude oil, what we have is we have what we call, I think what we will be calling this is a flat correction. Of course, it can evolve into much other things. So let me just draw a rough outlook. It's just the easiest way to explain everything here. So this is your A, B, and C. A, B, and C. Completing the higher order A, right? And then your A, B, and C. Completing the higher order B, and should be followed by a 1, 2, 3, 4, 5 up for the C before it goes for a fall. So see, just follow this circled thing, right? Forget everything else for a while. Okay, so this is how generally a flat is counted. A wave that goes in the upward direction is called A, circle A in this case. Wave that goes in the downward direction is called circle B, and last leg is called circle C. Now, a few more important things to note about a flat is, again, I'll have to draw another one. A is followed by the B. the B generally will touch the starting point of A, generally, not always. It goes almost near to it, let's say 90% to it. See, in this case, it has touched it already. Okay. So that qualification is done. The second thing the B can do is it can go lower than the start of A, like 10% lower or a little bit more lower, let's say till here. Okay. So it has not yet done that, right? But where am I pointing this to you is, by the way, guys, am I still online? I saw that there was a small connection error at my end. Is the connection error also visible at your end, or it was just a temporary IP address change from my fiber and connection provider? Just give me a quick confirmation on that. I don't like getting disconnected given I have two separate fiber connections for just that. John is saying fine on YouTube. What about TradingView? It says 6 online. Let me refresh it. So when Ben is saying I'm online. Okay, thank you. So now let's go ahead with crude oil. Sorry about the interruption. Now see, the last point, Juice, thank you for the response there. So last point I made was that B can also go a little bit more lower than the current level, right? Currently it's almost at the start of it, right? So this is important to keep in mind that maybe this B is not complete here. Maybe it will just go a little bit more lower, okay? So first keep that in mind. If the B can continue and go a little bit more lower, generally we do not expect it to go more than 70.18. Okay, that's the general estimate we take. 70.18, I'll just mark it so that there is no confusion. So again, the first hypothesis is either the B is complete here, and if it is not, then it can go a little bit more lower till even 70.18 something level. Let's say 70 for the sake of convenience. I'm using the O and A data feed. If you go to the NYMEX futures, which are on the right hand side, the price is 78.21, and O and A data feed are the price at 78.712. They have a small difference in price. Just keep in mind the data feed I'm following. So getting back to the point, one point which becomes clear, or a hypothesis one, is that if the market goes lower than the last low of what is this 76.082, this level, then we can look for a sell setup. Why? Because there are two things, as I just said. First thing is B might still be continuing. Second thing is that B was complete here and C was complete here, right? And if B was complete and C was complete, then itself it means a sell. Look at this. B is complete here, C is complete here. What is this? Sell. Right? So now we have a confluence of two factors. If B is continuing and it goes lower than this low of 76.019, then it's sell. Second, B is complete and C is also complete, then again it's a sell. So basically, in conclusion, if the market goes near this last low, 76.082, then it's a high probability sell. Of course, put a stop loss, because as I say so many times, everything can happen here. Just because everything can happen does not mean we will not play the probabilities. That's what we are here for. Speculation basically means playing the probabilities. If you do that right, you'll be more right than you are wrong. And that's what we do analysis for, right? So long story short, there's a high probability setup here. Obviously, take your stops in. That's why I use the disclaimer. I don't want to own up to your profits or losses. But I think I discussed this quite clearly. And if you are clear on this, just type in clear before I make any other point, because it might get confusing from here on for some people. So I'll just wait for a response that understood or clear, something along those lines in the comment sections, both on TradingView as well as YouTube. I have 5 people live on, sorry, on TradingView. And on YouTube, I have, oh, John is saying clear. But John, we are discussing crude oil, not gold. What about you, Praveen, Joost, and Ganpati? Are you still online with us? Did you understand the points I made on crude oil? Andre, is there still there or not, Andre? I'm waiting for your response, guys. And when Ben also. Yes, sorry, typo. John is saying. And Ganpati is saying clear. Praveen is saying clear. And Jush is saying clear. So I take it everybody is understanding it. Thanks, Andre, for the response here. So I did not hear clear or anything from that sort. I'm assuming you are clear here. So let's move ahead. Yeah, guys, one thing I wanted to check out of context here. How many of you are joining from a desktop and how many of you are using a portable device like a phone or a tablet? Can you just type in D for desktop and P for portable? I'm just curious because the interfaces are completely different on both devices. And it also changes the experience you have. I think it is harder to comment if you are using portable device. So Ganpati is saying desktop, John is saying desktop here, Juice is saying desktop, and Praveen is saying desktop. That's awesome. I always prefer a desktop, guys. They are real traders, in my opinion. Andre and Ben is also saying desktop. That's cool. You guys are pros. No kidding here. So Ganpati was asking question how to know a particular wave is completed. So yeah, Ganpati, as I said, most times we don't really know, right? We play the probabilities. Like for instance, in this particular case on crude oil, that's a good question at this point. I said two things, right? I said if the B is complete and the market takes out this low, we'll go short, right? And I also said that if the B is still continuing and the market takes out this low, we still go short. So you have to understand, I don't really know if the B is complete, but I'm still taking shorts. So that's the beauty of it. You don't know certainly what's going to happen most of the time, right? When you do know, you go big, right? But this coincidence of certainties or this coincidence of probabilities is what we are waiting for. High probability setups. Basically, I discussed the same concept in my book, Think with the Markets, how to take multiple setups and how to combine them to form a high probability trade, right? So that's the analogy you have to understand. We don't really care about things most of the time. We're just looking for intersection for that high probability setup to form. I hope that clarifies Ganpati what I was asking. And other times, Ganpati, the trend lines will be able to help you. In this particular case, uh, uh, for instance, in this particular case also, I believe you can draw some trend line here. Actually, no, not in this particular case, but in case of a simple impulse like a 1, 2, 3, 4, 5 of you might be able to do that. We'll cover it when we go to something like that. You can just push the question again. So question from Andre, in this instance, what are some examples of what your trade setups would look like? A few examples would do. In this instance, some examples of what your setups would look like? So trade setups are always fluctuating based on the situations, Andre, because Elliott wave patterns, although they are 13, but what we are really talking about is we are talking about an intersection of multiple different hypotheses or multiple different analyses on the same chart. So what basically means is that I can consider this market to do multiple things, right? So in those multiple things, what are the things that are matching? Some of the setups that work are like one of this wave B setup which I just discussed. It will keep repeating itself many times, but some setups are unique to themselves. They don't happen that often. So if I were still to give an example, I don't think it will be a good idea at this point. But yes, if I come across a chart, something like that, I'll definitely try to give an example of it. But I highly recommend you check out the book. It is available on Kindle. If you have a Kindle unlimited reading subscription, it's available there for free. So check out the book. I have covered this same concept in extreme detail here, how to analyze the probabilities and how to form trade setups on intersecting scenarios. The whole book is dedicated to just this same concept. A few examples would do here where you stop and take profits might be placed. So stop, I would like to place, if the market goes, let's say straight down from here, I would like to place the stop here. So basically last reversal point, right? And the setup target is around $70, as I already mentioned. But in these kind of instances, it's better you trail the profits once you are in profits instead of waiting for a proper target, right? These are fast moving decision making things, right? The same thing I'm doing, some other algo might also be doing it. It not might be, it's obviously doing it. So these things, when they move fast, because as I said, the setup is high probability. So high probability means I'm not the only guy who's able to spot it. If the setup is activated, thousands of algos and thousands of other prop traders will have spotted it. Obviously, just to give you a reference, I also work with prop traders. I've trained them with Elliott Wave. I've worked with hedge funds. So I know that they use it. And because they use it, they can also see the setup, right? So once it's triggered for them as well. And if it was high probability, then it most likely, not most likely, it's heavily likely that it will go fast there, right? So again, not elaborating too much on it, you get the idea what I was trying to say. Now moving ahead, let's discuss the second possibility. The second possibility was that I was suggesting that if the wave B is over scenario. So if the wave B is over, the second we have already discussed. There's a second. So this will be the third. So if the wave B is over, in the third scenario, we are assuming that the wave B is over. But the thing is that the wave C, this wave, it might continue higher. Something like this. Wave 1 up, 2 down, 3 up, 4 down, and 5 up. Right? So if it continues higher, right, then it is still forming the C wave, right? If it is still forming the C wave, then we have two longs, one for wave 3 and one for wave 5. Now, how do we figure them out? As I just said, our indication for this market going higher will be the break of the 82.293 level or the last high. Recent high, sorry, not last high. So the most recent high, if the market goes higher than that, then we can assume that the wave C might be continuing. So that would lead to a long setup. Again, keep in mind, long setup here is counter to the trend and hence should be traded very, very fast with precision. Okay, this requires expertise, which I will not be able to explain here in this 1 hour webinar. Okay, what I'm saying over the surface is just a very small amount of information here for public usage. Okay, but you get the idea. It's a counter trend setup. It's a long setup here. So we have now two setups. Both are very clear. So crude oil will be a very, very interesting one. Very interesting chart. Just follow it. Follow both the counts. All three of the counts. Go over this recording multiple times. Obviously, do your own analysis, and keep in mind both sides are leading to something here, and both are risky, obviously, as always. So there's a question here. When Ben is asking which book did you say? When Ben, I'm the author of a book called "Think with the Markets: Secrets to Achieve 80% plus Accuracy Using Elliott Wave." So the title is always in the signature if you just scroll down, but I'll just type it here for your convenience. Type it in the Kindle section on Amazon, you'll find it. So that was it for crude oil. If you guys have any queries or anything that you did not understand, I just deleted everything. Now it's back. So if you have any queries or anything that you did not understand, just type it in the comment section. I will like to take the doubts at this point in time. You're welcome, Van. And yeah, if you are clear, also please type in clear. How would I know that you are understanding whatever I'm blabbing? Right. Thank you, John. Thank you, Ganpati, for your responses. When did you understand what we discussed on crude, and what about you, Andre? You understood everything we discussed? Thank you, Praveen. Thank you, Brian Smith and Juiced on YouTube. So when is clear. So now let's move on to the chart of gold. Somebody here was asking gold, where is that person? Junaid, where are you, man? We will be discussing gold now. Okay, now let's move on to the chart of gold here. Let's check gold chart. Where is that? These. The hell? Oh, I have it for the sake of screenshots. Yeah, Ganpati, about that, I'm starting a new series for NSE stocks and Nifty and Bank Nifty. So I haven't figured out the date yet, but I'll send an email announcement at the end of the week. So just look out for it. That will be dedicated completely to all that stuff. So, and I would also need some cooperation if you have some groups, Praveen and Ganpati, if you have some groups where you can share. Uh, how about you just get in touch with me? Just send me an email. I would like to go on a call with you guys and plan a strategy of how we can share the content on share the coming upcoming live streams on NSE stocks and Nifty and Bank Nifty. Drop me an email, Ganpati and Praveen, if you have some groups or some ideas on how to share. We'll just get on a call after this webinar, or we can just arrange a time for tomorrow, whatever is convenient to you guys. So, anyways, let's head over to gold. And before that, I'll just have a small request with you guys. If you guys on TradingView Live, then how about you hit the like button, the rocket button here, right? I think we are doing an awesome job. I would like to see at least 2 digits crossed here, 10 number taken out. We are already at 6 only, which is very slow. And same goes for you guys on YouTube. It's only 4 likes, and I'm seeing 5 people are already in chat with me. So don't forget that the like button. Keep in mind, if the algorithm does not see likes and comments, the algorithm does not promote the content. And if the algorithm does not promote the content, then our visibility is reduced, which is not something we want. Okay. So I'll just wait for a few seconds and see if somebody, or not if somebody, if you guys are hitting the likes or rocket buttons on all these platforms. Oh, TradingView already increased to 6. And YouTube is also increasing. Okay, guys. And last request before we move forward, share this webinar once it's complete. Share the TradingView link, share the YouTube link, or share my website link. I will also post it on my website later on. But share it, right? At least on 2-3 social media or groups. Because what happens is once the link is shared on multiple different platforms, YouTube starts to give weightage to the incoming traffic, because the traffic is coming from different sources. Then the YouTube algorithm gives weightage to it and we go up in ranking. Okay, so higher visibility is what we are after right now, because these are the early stages of me doing these webinars. And those of you who are joining for the first time, next week I'll be going live Monday, Wednesday, and Friday, same time as today. Actually 15-20 minutes earlier than what I started today. That will be 7:30 p.m. IST, 2 p.m. BST, and 6 a.m. PST. Okay, I'll just post that after this webinar is over in the comment section, the timings and the days. But I just wanted to give you a quick update. So gold, Chamera is saying C. Thank you for the response there. So gold, let's discuss the, what do you call the thing? So guys, last webinar when I did on gold, let's just quickly check it, because there was something worth pointing out here. This is the website post on gold. The gold chart was around 49. So let's quickly check around 49 something. And what I want to show you what we discussed in the last one for a specific reason. I was trading gold at that time when the webinar was happening, and I was short on it, right? And I suggested that it's a clear sell here around 1743. Okay, so when the market was around 1743, I suggested that it was a sell, and in 21 hours, let's see what happened. 1743. So somewhere here we suggested the market was sell in the live webinar, and within 21 hours this market touched the low of 1730. And keep in mind, if you go to the last recording, I have mentioned that the target is 1730. So very interesting. The market not only did it, this is the target by the 1730 target line. Market not only did go lower, it exactly reversed from the target line. It formed a very fast spike. I got a ping from my terminal that my orders are filled. So I went in and checked, is it stop loss order or the target order? It was the target orders that were filled. So keep in mind our analysis on Elliott Wave, It is a high probability, right? And I've been doing it for 6+ years now with 80% plus accuracy. If you missed at the beginning of the webinar, I always boast my accuracy track record. It is to bring confidence to you current learners and traders that something like this exists. So I have this long forecast of 6 years plus, soon to be 7 years. 2016, 83%, 2017, 80 plus, 80 plus, 80 plus. You get the idea, right? All these webinars that I do have been concluded here, what I said and what happened, and we have given these ratings +1, -1, and the accuracy stands out. This one is 88.52, as you can see. So I'm just showing off that because we have such a great track record, which is unseen in the industry. To make the point again clear, that follow the live webinars. Getting back to the charts, this gold trade, if you were live, you could have caught it. If people watched it later on, I mean, after 24 hours, some people got my email and some checked the notifications on their social media feed. The trade was already gone. So that's my point, guys. Follow the live webinars live. They are live for that reason. But forecast is very different to trading. No, Chimera, who said I'm a forecaster? I'm a trader myself. When I made this this analysis, I was in the trade and I mentioned it in the webinar. If you are starting, just watch this webinar from the start again. I don't like to see such comments because they show that you are not following what I'm saying. I was short on EURUSD, I told it, and I was also short on crude oil when the trade went wrong. And I was short and I told I was short and then I got out and lost. So I'm a trader. But because when I come on YouTube or TradingView and when I make a stream, it becomes a forecast. You understanding my point? Because when I do it, it's a trade, but when I tell other people, it's a forecast. That's the very definition of it. So don't take things like that, right? First, try to understand who the person is. Anywho's, getting back to our what do you call discussion, I got a little off track there. I generally do when people try and claim things like that, but I hope it does not mean he was trying to imply anything. So, anyways, let's remove the gold thingy from here and let's discuss what's going on. So, if you are following the last 2-3 webinars, then you remember that we have a count following here, which is suggesting, let me just go over the whole thing very quickly. Which is suggesting that this was a A or W, B or X, and C or Y complete. So we were going with the ABC analogy. Right? And with the ABC analogy, there was two things that we had in mind, right? The first thing was that this was a diagonal, right? And with the diagonal, we could say that the C is complete, right? I have discussed diagonal like multiple times in here, so I will not go over it. Unless some of you guys want me to go over it, then I'll go over it. So you can just type it in the comment sections. So the second analogy was that, the first analogy was hypo one. Let's say that the C is complete. In that case, the market will go higher. Okay. The second analogy is that the C is still continuing. Then this is the first wave of the C. This will be the second wave, or maybe the second is also continuing, followed by the third, the fourth, and the fifth. Okay. So in that case, if the second analogy is forming, then hypo two will be suggesting downward movement. So we have basically literally two counter views here. Okay. So if there are two counter views, then that generally means wait and watch. Okay. And wait and watch basically means you can only get some short term trades, but no concrete long term trade. That's generally the case with these things, right? So in that case, what I have in mind here is that let's just analyze this market from this point of reference. But firstly, guys, are you able to understand this count which I discussed, the hypo 1 and hypo 2 here? If you are not able to understand it, then from here on, it will not make much sense. Just type in clear both on TradingView as well as YouTube. We can always redo the analysis if you are not able to understand it. Yeah, please stop commenting here. I'm sensing a sort of negativity here, man. I'm not done with the analysis. I'm just saying if you understood the point I made. Okay, so now that the point is clear here, let's go ahead with the lower time frame analysis. So the lower time frame analysis here is suggestive that the first thing is that this is an no. See, if you try to understand, you don't go around making comments like you made in the 5 minutes earlier, right? So I'm not very happy to read your responses. I'm just saying it outright. So just be a silent viewer here, or you can leave. So getting back to your analysis, sorry for getting sidetracked. From this point of reference, as I just said, there are two possibilities. The first possibility is that we are going for a ABC correction, which would suggest that this is a wave 2 which is complete, right? If this is an ABC correction, and if the wave 2 is complete, then we will see downward movements is what we just suggested, right? So now, because this is an ABC correction, would mean that a downward movement should come. That also means the counter thing is true. That means if the market takes out this high, right? If it goes higher than this level, then that also means that this is a possible long setup, right? But there are some complications which I will discuss, right? So first thing is, if it takes out the high, then it is a short-term long setup, right? But what are the complications of this short-term long? Let's quickly check that. So first thing we say is that if the wave 2 is complete, it should not take out this high. So that means taking out the high means either the 2 is continuing in the upward direction or it is not a 2, it's a 1, 2, 3, 4, 5 in the upward direction, right? So now coming back to the complications part, the complications part is simple. Just because it takes out the high does not really mean it is going to fly much higher, because there is this another count which is coming to light here. And this another count is suggesting that this is a 1 up, a 2 down, and a 3 up here, okay? So if this is a 3 up here, sorry, 3 up here, and 3 up here, and then remember, if there is an overlap between 3 and 4, then we call it a diagonal, right? And the property of a diagonal is that once the fifth is complete, it will reverse. So now if you look at it in the light of this newfound count, you will soon realize that even though the trade is correct, even though you go long, once this last almost high level is taken, which is let's say 1783 something is taken, then even though it is a correct setup, even though the count is right, but there is a high probability chance that as soon as you go long, the market does not go much higher, it starts to reverse, right? So I think what the conclusion here is that above the high of 1785, the market is open to upside, right? But the upside comes with a cautious view because it could form a diagonal and then reverse. But again, even if it's a diagonal and reverses, later on it will go up. So the point is to remain positional here instead of going short-term intraday here, right? By being positional, I mean that if you are going to enter longs at this high, you cannot enter massively, right? If you are going to, let's say, take a risk of $10,000, I would suggest that only enter 2,000 here, right? And then wait for a proper retracement and reanalysis, and then draw your retracement levels 61.850%, and you get my point, the whole 9 yards. So that's my point here. Although the longs will be activated above the high of 1784, right? They are not straight off longs. They are positional longs, and for positional longs, you will need to have a proper understanding or deeper understanding of this market at that point in time. So that's our case discussion for the gold spot for the long setup, right? And if you guys are clear, just type in clear before I discuss the other perspective or the downside perspective here. Just type in clear or understood so far, and then we'll move on to the next scenario for gold. Okay, thank you, Andrew, for the comment. Thank you, John and Brian. Just also is saying clear. Ganpati is saying clear, sir. And on TradingView, I have Kairos WG, hello Kairos. Okay, so that's our quick take on gold so far. Now let's discuss the counter trend view here, right? So the counter trend view here would be that if the market is going straight down, right? So unfortunately, we do not have any confirmation for a straight down movement because, as I said, even if wave two is here, it's not really a complete wave two. Maybe it's just continuing, and if it's continuing, then it can form a complex formation. It can just go as a W here, X here, and then Y here. I mean, there are 10 different ways you can count it, right? So I won't even get into it. The long story short is if there is a sell setup here, the sell setup is not confirmed, the sell setup is not clear yet, and it probably won't be clear for quite some time. The only setup which is clear, I just discussed, is the upside setup, right? Although I have a alert placed here at 1731, but this is for intraday purposes. I might look for a very short-term intraday setup here or something like that, but nothing really long-term here. That's basically it for gold. No clear sell setup right now, and long setup we just discussed the positions. If you have any doubts, you can just type them in the comment section. Otherwise, we can just move on to the chart of S&P 500, which should be followed by where is that? Which should be followed by BTC. Okay, so these are the charts we discussed from here on, and will be followed by Nifty, or S&P followed by Nifty followed by BTC, somewhere along those lines. So I don't see any further doubts or queries here. And let's move ahead with the chart of S&P's 500 here. And again, guys, if you are understanding whatever I'm saying and if you are liking the content, the rocket button, just hit it on TradingView. Okay, it is there to be smashed, I would say. And same goes for YouTube. If you guys are understanding whatever I'm saying and you are liking the content, hit the like button on YouTube. Okay, the YouTube algorithm likes it, and that's what we are trying to promote. TradingView is very low participation, generally speaking, and the likes are also very low compared to the people online. But oh well, can't do anything about it other than the request. Okay, guys, so let's quickly head over to the chart of S&P's 500. If you are following me for the last 2-3 webinars, you know the whole story that I have. It's a very simple and same old story that we are covering. This S&P is long. We are very sure of that. We have stated in multiple webinars, and I have also stated that it could go sideways along with a small upward movement. But I'll just conclude it again here. So this is our point of reference on S&P's 500 around 4818. First leg is a diagonal, is what I'm assuming. I've considered this as an A, let's say, and my assumption is that the B is continuing. And once the B is complete, there should be a downward movement, and the counter view is, so this is our hypo one, that once the B is complete to the upside, there will be a downward movement. So up and then down. So if the B is complete to the upside, there will be a downward movement. That's what I'm saying. And hypo 2 is suggesting that B is complete over here and C is complete over here, and there should be only upside. But I am not very much in alignment with this. I don't think that's a very high probability scenario. I think that's a quite a low probability scenario, and that the hypo 1 is the high probability scenario to follow. Keeping that in mind, keeping the point that hypo 1 is the one we think is the one is being followed by the market, let's quickly have a look at what hypo 1 is suggesting. So let me remove the hypo 2. So hypo 1 is suggesting that we have a sort of a flat formation here, A up, B down, and C up. And as we have seen so many times within this webinar, I have discussed the flat formations like, I don't know, 4 or 5 times maybe, or more. So in this flat formation, we have what looks like a wave C under progression. And now again, keep in mind, this could become more complex, but I am just discussing the view which is most likely or most visible view at this point in time. And if this C is indeed a diagonal, then it should have 5 waves in it, right? I will discuss other counter views in a second. But the first view will be 1 up, 2 down, 3 up, 4 down, and 5 up, right? And in that case, this will be again considered a diagonal. A lot of diagonals, again, I've discussed it 4 or 5 times. If you guys are still unclear, or if you have joined the webinar late and you would like me to emphasize on what a diagonal is or a flat is, you can just type it in the comment sections. So once we have a 1 up, 2 down, 3 up, 4 down, and 5 up, we can consider that the C is possibly complete. Okay, so that could lead to a short-term sell-off, not a complete fall, because as we know, the B waves, the circle degree B, might still be continuing sideways and lead to a sideways complex formation, right? So anyways, the idea here, I'll just like to emphasize, is very clear. First of all, we are seeing a possible diagonal here. Secondly, once the possible diagonal is complete, we expect the market to give a short-term sell-off, not necessarily a big sell-off, but a very short-term sell-off. And another view is that this diagonal is possibly still continuing. 1 is clear and 2 is clear. That's the only thing about right now which is clear. If we say 3 is here, then it's not very clear. 3 might still be continuing a little bit up, followed by a 4, followed by a 5, maybe an expanding structure. So a lot of things are unclear on this chart of S&P, right? I personally think that the diagonal structure we can follow, but I won't be interested in short-term trades right now. I'm more of a position-wise, I'm looking for possible sell-offs, right? For that, we have already got the alerts placed around 37. Is it 37? Sorry, 37.44 something, roughly speaking. So what I think is we have to wait for this C to give us some sort of confirmation before it finishes. And right now, the confirmation is definitely not there, right? So another interesting point I would like to point out here is that B, if it becomes complex, it could just go sideways, right? It could form, let's say, a W, and then it could form a flat for an X in itself, and then form a Y itself. So I'm just putting it out there for you to keep in mind why I'm sort of avoiding this market at the time. There is a lot of possibilities it can do sideways before giving us any clear sell setup. So S&P literally is a wait and watch. The only chance you have of ever actualizing anything from this analysis is if you are option seller. Then you can just sell some spreads on the upside and sell some spreads on the downside. If you are into options, you will understand what I'm saying, right? So not much to explain here from a futures traders perspective. Obviously, if you are options traders, you already know what to do. Let's just take some comments here before we move on to the next chart of Nifty. Did we discuss Nifty? Sorry, just joined. Yes, Vidhan, we will discuss Nifty. Just next chart is Nifty. And there's some questions on TradingView. And by the way, guys, if you understood what we just discussed on S&P, you can just type in clear or understood, something like that to show your responses. And yes, something like hitting the like buttons and rocket buttons to show your responses as well. So I have a question here. What confirmation you look, how you know you're finished? I don't know if the up is finished and I don't have a confirmation yet. It's a wait and watch situation. So definitely it's a completely wait and watch situation. We don't even have any specific levels. So as I said, it's just an option seller's market. John is saying clear and Andre is saying clear. Ben is saying light and Ganpati is saying clear, sir. So next chart will be of Nifty 50 and then we will cover Bitcoin. So if you want to discuss Bitcoin or see my analysis on Bitcoin, wait till the end. Okay. So then we will cover Bitcoin. Let's quickly head over to the chart of Nifty. Which is the count I'm following? That's not the count. HTF count is the one we follow. Yep. So this is the chart we are following on Nifty 50, and this is a impulse in the other direction. 1 up, or 2 down, or 3. Yeah, guys, 1 second before we discuss this chart, one important announcement. I'm going to start a series of webinars dedicated to Nifty, Bank Nifty, and NSE stocks, right? but I want to establish some fundamental marketing medias like groups, and I want to assign some people who can share the content on a regular basis in some active groups. So if you have some groups you are members of, or some ideas on how we can promote it, then hit me up on my email on my website. Let me just quickly share that. This is the contact us page on my website, which is 50s.com/contact us. If you have any ideas on how to relay that forward, relay our upcoming webinars forward, then just fill out this form with your number, or if you want to just get in an online meeting on Zoom, just type in the message that would like to connect regarding marketing further. And I'll just arrange a Zoom meeting or a WhatsApp call, whatever is convenient to you guys. So Vidhan and Ganpati and there were some other people who are interested in NSE stocks, Praveen, I believe. So if you guys have any clues on it, just hit me up on the contact us page. And the idea was to launch these webinars from this week. But as I said, we have to set up some solid means which can relay our messages, right? So once they are in place, you can see either three streams per week or even daily streams. So you guys would like that, don't you? Or won't you? So anyways, if you guys have any connections or any even ideas or things we can consider for that marketing media, hit me up on the contact us page. By the way, same goes for these streams of Forex and index and commodity coverages. If you guys have some connections and you can hook me up or just confirm that you will be sharing in those media where we can get a reach of, let's say, some forum which has a reach of thousands or something, then I'm open to it, right? And I would like to hear from you about that. You guys, hit me up on the contact us page regarding that. That's about there. Let's get back to the chart of Nifty 50. So very clearly, I remember in the last webinar, I suggested that this was the wave 3 is our analysis, and the wave 4 was unclear if it was complete or not. But there was only one thing which was clear, that if this market takes out the high of 18,427, then we are in longs, and then the wave 4 will be considered complete, right? So now that we have actually done that, we have gone ahead and taken out the highs of 18,427, whatever, right? You get the point, this high. Vedan is saying, sure, we'll connect you to one cream group on Kolkata. Yeah, thank you, Vedan, for that. Hit me up on contact page. I'll like to arrange a call even after the webinar or tomorrow, whatever is convenient to you. Because I would like to confirm what are the groups, what are the possible audiences with you guys. Excuse me. So continuing forward, as I said in the last webinar, it was very clearly stated that if this last high was taken out, we will consider the 4 is complete, and then the 5th is in progression. So now that it has already happened, our analysis now gets reduced down to the point of figuring out what is happening with the 5th, right? So there are two things which are happening here. But by the way, one thing we have to do here is draw a darn trend line. Okay, so now that trend line is here in place, I'll just change the color for it. Red. Okay, so now with the wave 4 in place, we now have to just figure out what is the possible configuration for this wave 5. So there are, as always I keep saying, there are multiple possibilities, and this is following, this is what I'm suggesting as one of the possibilities. Let's just go with Roman 1. So this is one of the possibilities that I think is possible, right? Again, as I said, multiple things are possible. I'm just pointing out the most likely scenario. So in this scenario, I'm assuming that wave 4 is still continuing. That means one leg up is remaining for the completion of this wave 3. And if this one leg up is remaining, then after the wave 3 is complete, there is one more correction which will be followed by one more leg up for wave 5. So basically, long story short, if this count is correct, keep in mind, if the word if is at emphasis here, if this count is correct, which looks to be the case at this point in time, then we have one leg up remaining and then another leg up remaining. Okay, so two legs up possibly remaining if the current count on a Nifty plays out. And those of you who are already following my analysis, they would have already gone long somewhere here. If not somewhere here, then at least at the high, right? And it still went up. So anyways, those who did do things like that, they already know what they're doing. I will not emphasize much on it. There are 10 different ways to take the cream out of these trades. But anyways, going with the future trader scenario, we have two possible longs remaining. I don't think there is much to discuss on it. It is rather very, very clear, right? And because it's so very clear, I'll just take your comments if you have any on Nifty. If not, then we can just move on to the next chart, which will be the chart of Bitcoin, which will also be our last chart. So just type in clear if you are clear, or if you have doubts, then type in your doubts. As we move on to the chart of BTC USD. Vidhan, Just, Ganpati, John, Praveen, are you still with us? Brian. And what about the audience on TradingView? I'm not sure how many of you are interested in NSE stocks, but Andre is typing in clear. That's good. Okay. What about YouTube? Suddenly I'm not seeing any responses. Okay, there it is. And by saying difference between WXY, Z, and ABCD, triangle, wave, in clear. So Ganpati, that's the out of context question sort of here. And WXY XZ is generally a triple zigzag. It could also be sideways. But see, I'll just say to you one simple thing is, a triangle will have some sort of contraction. Okay, it will be always forming in a way that when you draw the trend lines, they will intersect at a point. WXY does not have any such foundations, so that's the clear difference here. Right, so that's one way of figuring it out. Vidhan is saying clear. So in that case, let's move on to the chart of BTC. I hope Ganpati, your doubt is cleared here, although that was sort of out of context, so I'm not sure how much I can explain at this point here. BTC, the analysis is literally the same. So if analysis is the same, but I'll still just conclude it again. You can just watch second trading opportunities webinar, right? In that one, I have discussed BTC for 10-15 minutes, I think. I'll just cut it out and put it as a video on my YouTube channel, 50 years market analysis, as well as for later viewing for people. So the counts we are following on BTC are this. We are assuming that it's a W, and we are assuming that it's an X. And there is another count which I will not be talking about here because it will just extend the webinar for very long time. I have already discussed it. So although for those of you who have joined in later, I'll just like to point out one thing, that the important clips from these webinars, like the important analyses, I'll just cut them out and put them on my YouTube channel. And my YouTube channel you can find in my bio. If you scroll down on these webinars, you can find my YouTube, and my Twitter is always here, along with my website, obviously. So if you want to just check out some of the highlight parts, not all parts will be cutted out, so you will have to view the webinar anyways, but only the highlight parts, like if I've done a very long-term analysis or something like BTC, I'm saying. So you can just hit the YouTube button, right? It will take you to my YouTube channel, 50 Years Market Analyses. Videos are here, shorts, and live. So this broadcast is also being streamed live on YouTube. So this live will also be visible there, right? And when I refer to my past analyses, these are the past lives. First live was conducted 11 days ago, second live 7 days ago, third is 3 days ago, and this is the fourth live trading opportunities webinar. Okay. So this is how you can just follow my work. Just go to live if you want to check the lives, and videos if you want to check the most recent ones. By the way, if you guys are interested, this one video has not gotten the amount of views it should. So in my private Slack, we were able to not only pinpoint but trade the fall in Luna right when it crashed, the biggest crash of this year possibly. So I have a video documenting the whole analysis with all the screenshots and all the posts that I made in our private Slack. So it is an interesting video for those of you who are interested in getting your hands on some quality Elliott Wave analysis. So I'll look to consider posting more of these. It just takes a lot of time. I was not able to post for last 2 months because I'm just doing lives and they also take up a lot of time. Anywho's, coming back to the point and discussing BTC. And yeah, one last point, guys. The lives, you should keep joining them. And I'm streamlining the timings. The timings will be Monday, Wednesday, and Friday for the next week. I'll just type in 1 second. I'll just push it. And 1 second, where I have it. Okay, so these are the timings with the dates for the upcoming webinars for the next week. I hope you guys can join in, right? Because that's the point of a webinar. So now finally, getting back to the point, we were discussing the chart of BTC, right? And we were currently checking out the chart on the daily time frame data feed from Bitstamp. As you can see on the top left, the count we are following is a W, X, and a Y. Again, keep in mind there was a bearish count which was suggesting extreme downside. I'm not going to discuss that. I'll push it as a video later on my YouTube channel. And maybe I'll see if I can push a YouTube on TradingView. I think TradingView also has feature of pushing videos as reports. So the count was that if this is a WX, so the next will have a flat correction is what we are expecting here. The flat will have an A up and a B down and then a C up, right? And within this flat, there was this interesting point where we had a thing about this level of 15 to 26 to 14,800. It's not an exact level, basically within this region. So the analysis basically is suggesting that if this is the count being followed, then within this region, we expect this market to give up bounce, even if it's going to follow a downward path like this later on. Even then, we expect this market to get a support here and then reverse. That is just the baseline analysis we have had for quite some time now. Strong support region incoming within this region of around 15,800 something, roughly speaking, again to 14,200 something, right? I'll just say it roughly here, 15,800 to 14,200. So within this region, we are expecting a bounce. And the thing is, we'll wait for it and we'll see if the market reacts to this level and then forms an upside movement, right? And some upside confirmations will involve taking out the recent swing high, etc., etc. Once we get some upside confirmation, there are strong long setups which can be taken. Not very strong, I would say, but strong enough for a good move. And those would involve market movements taking the market to 30,000, 31,000 something as a wave C up, right? So as I said, possible longs are there. We do not have any confirmation. The reversal is still to be waited. The market has touched the expected reversal zone of the wave B completion point, and we will wait and watch for it to do something which will confirm our count here. So that's a quick take on this chart of BTC here. Some trend lines can also help us later on, but as I said, right now it's of not much use. We first need to see the bounce from waves for wave C completion here. So that's our take on BTC. Nothing very, what do you call, complex. But if you have any doubts, you can just type it in the comment section. Ganpati is asking, wave B is possible of wave A. Yes, Ganpati, you are correct. That is exactly the possibility. Also 123.6. Both are possible. So I'll wait for a few doubts if you have any, or if you are clear, then your feedback on how was this webinar. Did you like it? Did you enjoy it? If you did enjoy it, why did you not hit the like button? Just kidding. Please hit the like button if you watched this webinar and liked it or it helped you. If it helped you, please share it with at least 3 people or in 3 of your social medias or your groups related to trading. We want to have a bigger reach, right? And if you liked it, you will have to join me on the next one, right? Monday, Wednesday, Friday, incoming next week, Monday, Wednesday, and Friday. The times are posted in the comment section. Yes, Ganpati, I am also referring to BTC. That level is set for all things. It doesn't really matter which chart you are referring to. And yes, guys, lastly, as I should point out that, where is that thing? Yeah, so as lastly, again, I like to point out, my name is Neerav, and this is my website, 50guys.com. I hold accuracy of 80% plus for 6 years plus. All is verifiable, publicly proven. I am a trader first, and I also do these analysis which are posted on YouTube, right? All these track records are verifiable. Whatever I said about something, the date I said, and did it happen or not, right? Secondly, this track record is the highest in the industry, as I pointed out so many times now. You might have gotten bored of it. Secondly, you can follow my work on either visiting my Twitter, which is again at the top here on the website, or if you don't want to follow anywhere, but you will then miss out on the live feeds. But still, YouTube is a good option and TradingView is a good option. I'm also on LinkedIn if you want to increase your professional contacts. I am also into mentoring services. I have a video course which is listed here as Elliott Wave course and a personalized classes called Trading Program LT. I'm also the author of this book called Think with the Markets, available on Amazon's Kindle. That's about it from me from the marketing part. I hope you guys enjoyed this webinar, and I won't repeat myself the same old things. So that's about it. I'll wait for a few more seconds if you guys had any queries on any of the charts we discussed. If not, in a few seconds, I'll just go offline. And thanks for being a part here, guys.